Hey guys, breaking news from the Middle East.
The United States military began major combat operations in Iran.
Trump and Israel kick off heavy attacks on Iran today, aiming straight for regime change. US and Israel forces hit hard. Israel targeted top leaders like high-ranking military commanders and government officials and missile sites, while the US went after military bases, weapons, and other key spots that Iran uses to fight this war. Trump posted a video saying that it's massive and ongoing operation, and he's basically hoping the Iranian people can take over the government. This is risky and scary for the whole region. This is way bigger than last June's short Israel-Iran clash, which just hit nukes and missiles. This time, Iran fired back right away, sending missiles towards Israel and US military base in nearby countries like Bahrain, Qatar, UAE, and others. Most got shot down by defenses, but explosions happened everywhere. This feels intense, could shake up global security and energy. Really hope it doesn't blow up bigger. Now, what it means for the stock market. Markets are closed for the weekend, but futures and signals are flashing fear and uncertainty big time. Investors should expect a lower open on Monday. Oil prices, the main story. Brent crude closed Friday around $73, which is already up 20% this year, with strikes hitting near the Strait of Hormuz, which 20% of world oil flows through there. Some tankers are diverting or suspending ships. Some analysts see a quick 5 to 10% jump to $80, or even $10 to $20 spike if no quick de-escalation. And maybe it could hit $100 in prolonged war. Energy stocks like oil companies likely rally hard short term on the war premium. Stocks overall brace for a sell-off. Dow futures signaling solid lower. S&P or Nasdaq likely down 1 to 2% at open as investors dump riskier assets like tech and growth stocks. And we've seen some hints on trading this Friday. Gold is surging already at records, but more upside. US dollar strengthening may be Japanese too. Defense stocks like Lockheed, RTX often pop in these moments as more spending and more contracts are expected. Overall, many analysts think it's temporary if contained, like quick dip then bounce, like what happened in the past. But if weeks of regime push, higher inflation from energy, slower growth, it will be worse for the equity market. But what should you do right now? First, stay calm. Geopolitical shocks like this cause quick fear moves, but markets often recover fast if no major supply disruption or wider war. History shows air campaigns rarely lead to endless chaos. Watch for de-escalation signals over the weekend. Second, look for opportunities. Energy sectors, oil majors like Exxon, Chevron could see short-term gains. Defense stocks, RTX, LMT, Northrop, likely winners on spending boost. If oil spikes big, watch for inflation fears, because it could delay Federal Reserve cuts or even high talks, pressuring bonds and interest rates. Third, diversify and hold cash. Keep some dry powder for dips. Volatility creates bargains, but please avoid over-leveraging right now. Fourth, monitoring key things. Sunday night futures open at 6 p.m. Any weekend news on de-escalation or retaliation. Strait of Hormuz status, OPEC response as they might boost supply. If it stays contained, buy the dip. If it escalates, exercise more caution. Drop your plan in the comments, like if this helped, and subscribe for updates. Stay smart, talk soon.